All right, guys. So a few of us here. Just want to do a quick update on how I'm going to be looking at positions for 2024. Already posted it on the Lance's workshop, but try to make it a little bit more straightforward here. So let me share my screen real quick. So this is the 2024 spreadsheet. It's on ebook strategy guide. It's also on Lance's workshop. I pinned it, so it's hard to miss it. These are all the positions for the safeguard trades that I currently have open that will very likely stay into January because I'm very OCD and I want to get ahead of myself a little bit. I could theoretically close a couple of these maybe by the end of the month, but it wouldn't be at the target 90% profit. So I'm not going to over rush things and try to close stuff. So I'm just going to wait out for the target profit on these. So main thing is to see the number here. So this is the third row. This would be the third trade, right? 4, 5, and so on. Then if you go to the Discord and you go to safeguard and strangle, and then see the threads, you're going to see strangle line 3, strangle line 2, and so on, right? So, or SG, yeah. So SG and strangles are separate tabs. So SG is a safeguard. If I wanted to look at the safeguard line 4, this is the trade that I entered. And then line 4 would be this trade, right? So all you really need to do is have this open. You can just leave a random tab open in Chrome. That's how I leave it. And then you can see the trades that way. If you take a trade that I took, click the little bell notification there. So then whenever I update it, I might say it's at X profit, FYI, maybe I take it out. If I close it, I will write, close naked, for instance, and then I'll change the thread to close in front of it, just like I've been doing before. But this will make it a lot easier, at least for me, so I can see where the trades are. I had so many positions open in Safeguard where it was taking me a little time to find the thread based on the trade I did. I was like, oh, where is that 3,800 strike? And I'm like looking through the threads. I'm like, oh, there's one. Oh, but there's another one with 3,800. And then I had to double check. This will be a lot more easy, at least for me, and it should be for you if you leave the spreadsheet open. You just look for the line number and then see what happens in the line number, right? Does that make sense, guys?
It does.
Okay. Jamie, does that make sense?
I think so.
Okay. Yeah, so again, if you take a trade, do the bell. So that means anytime I write anything on here, and I'll always write when I close part of the trade or all the trade, you'll see that notification. If you don't take one of the trades I do, just don't click the bell. So then you won't really be missing much. You can still click it if you're just watching it to see like what I did for practice to see like, okay, so you close it here and it worked out or didn't work out. But in general, click the bell if you're in it. Don't click the bell if you're out of it. That's really about it. So hopefully it'll be easier for everybody to follow these things. Does that make sense?
It does.
And that's all I really had planned. One more quick thing, I guess. Not doesn't really matter to you guys. If you look at my camera here, I got my really cheap $2 dot notebook at Walmart. And I did make a video recently on it. But I'm just doing a quick legend here where I put the first few pages, I'm going to write the trade logs. And then I'm going to do a monthly chart. So for January, I'll see where all my current positions are. So you can see a quick visual of like where you are and if you're getting enough premium for that month, for instance. And then the next page, I'm going to write the exact same thing on the spreadsheet pretty much. I'm just putting in my entry, like line number 4, line 5, the naked puts, the PDS, and expiration date. Really simple stuff here, right? You don't need to do that, just for me to be able to see it much quicker. This will be the January spread. I've been doing these the last few months, if you notice. This line will be where the current price is for MES or ES on the first day of the month. And then I'll put my put debit spreads and my naked puts here. So obviously if it's higher up, it'll be up here. If the strike's lower, it'll be down there. So it's a really quick visual to see, okay, I have this many trades at 14 days, this many trades at 28 days, and so on. So I already know that I'm going to be a little bit low in January, and that's just because I want to be able to do the ES safeguards. So I'm pretty much waiting on my buying power the rest of this month. So I'll have enough buying power when I want to take those trades. So I don't mind January being a little bit low. I could still make 1 or 2% anyway. And then probably by February, March will be a lot better. Does that all make sense?
Does. Lance, a quick question,
Uh-huh.
kind of a big picture.
All
How
right.
much how much buying power are you dedicating to the safeguard strategy?
So I
So
have about a
if you take
50,
all your safeguard trades and you divide that buying power of all of the cum by your net lick, what's that percentage add up to?
so the way that I did it is I want my safeguards to be a pretty high percent of the whole account. So I actually added up the other strategies first to see how much I'm using on just regular MES strangles, the monthly naked puts. And then I noticed that I had about $35,000 left. It's actually a little bit more than that. So right now my account's at 54,000. I'm using 35,000. So quick math there. It's about 63, 65% of my account, give or take. And that's just for the MES and ES. I'll also be doing one oil and one gold. Those are about 6 grand each, give or take. If you go around 0.05 delta, around 90 to 120 days, um, typical buying power plus cash is around 6,000 for that. So if you want to add another 12 to that, I'm looking at 46,000 or so, over
And
50.
but
I'm
you
looking
leave
at
a
like
margin,
85% or so. Go ahead.
you leave a buying power margin as part of that number, right?
No,
So
that's a total buying power plus cash. The way I like to do the math on these is to just figure out what's the total amount of funds I need for the trade. So the initial buying power could be, say, $3,000, 3,500 or so for like an oil safeguard. And then I close to double it. So it'll be about 6,000 total for the whole trade. It just makes more sense in my head in the math that way instead of thinking everything in half and then using 50% of it. I just rather think of what's the total amount of needs for each individual trade.
yeah, I think you've seen my worksheet that I've done in Excel
Yeah.
before,
Uh-huh.
but I basically take my net lick divided in half,
Yeah.
and then I use a percentage of that.
Yeah. That's the same. It's like saying six or one half dozen. It's the same answer,
It's the
right?
same thing.
Yeah.
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 Sounds like we're getting the same place.
Right. And then how I follow my profits and what percent I made, I'm counting the full buying power plus cash. I know some people will say they made a X percent return on their margin. So it's essentially looking better than it might actually be. Because let's say you did an oil safeguard at $3,000, you make $300, it would be 10% return on your margin, but you're really using 6,000, so it's really 5%. You really cut it in half, if that makes sense.
That makes sense.
So yeah, that's just how I do the math. I'm not trying to lie, saying like I made this huge returns on margin, and then it looks really good, so I could have more people join beta traders. Like I want to be able to show this is how much money I needed, this is how much money I made based on that, and then just go from there.
Um, okay. Well, that's helpful. I mean, it sounds like if you take it down just to if you're so you said your number's around 60-ish% on
For ES and
MES slash
MAS, yes,
ES,
yes.
but you're also doubling up the amount that you're using on paper per trade.
No, it's
So
the total. It's the total. I'm using 35,000 total for the MES and ES. So each MES is about $1,100 for the total buying power plus cash. Each ES is about $11,000. So I'm going to use 35 based on those numbers.
man, my interactive brokers, boy, we've
Yeah,
had this conversations numerous times.
it's
You
just
know,
higher. Do you remember how much an ES safeguard is about in buying power?
about 10 grand.
Phew. And then you have to leave more in cash. That's gonna hurt in terms of your buying power and cash use.
Yeah,
Yeah,
I
that's a
mean,
bit high.
I looked around at different brokers and it just was with the limitations I have because of where I work and I can only trade with certain brokers. Um, you
Yeah.
know, once I break from the company, I'll probably move to Tasty Trade. But there are a lot of things that are beneficial with interactive that I couldn't get with Tasty Trade as well.
Yeah, they get the
So
interest on the cash, right? It was about 5% or so.
yeah, you get interest on the cash, and buying T-bills is really, really easy.
Yeah.
Um,
Yeah, you're doing good on the ladders. So
yeah,
I
yeah,
would
I'm
probably stay where you
now.
are. You're probably gonna stop working in a year or two, you said?
We'll see.
Maybe. We'll see.
We'll
Yeah.
see. We're talking
Are
about
you not able to use Teachers Paid at all with your current job? Or they're just gonna
correct.
turn it down?
They're not approved,
Ugh, I'm sorry.
so it is what it is.
You have your daughter. Your daughter could do it. Close.
Yeah, I mean, honestly, with all that's going on, I don't have time to trade her stuff anymore. So I'm
Oh,
just
yeah.
more into stuff
Yeah.
a little bit longer term, but I'm watching like, you know, just doing basic TA and kind of in and out of SPY,
Mhm.
um, at major turning points
Yeah.
is what
Yeah.
I'm doing with.
Fair enough. I mean, just stay with it. You might be able to be okay with a little bit less than the double cash. So in an ES, maybe get around with 15, 16 grand and just be aware of it. If you're hedging well against it anyway, you'll probably be okay in most cases. Just be careful because the notional value is really high, especially if you're doing a lot of ES safeguards.
Yeah. Yeah. I mean, right now I'm just doing one ES, like each time I do a safeguard. Um, but I'm actually on the verge of increasing that to two.
Okay.
Uh, but I do other trades too. So
Yeah.
this, where this represents, more than half of what you're doing, I'm probably about um a third.
Yeah. That's fair enough. I mean, if it's part of your plan and you like what you're doing, you might as well stay with it. And
Yeah.
then when you transition to Tasty, eventually we could go over more about buying power and all that with your account.
Yeah.
Sounds good. Any other questions, Jamie, Jason, Matt, Russell?
It, I don't want to monopolize things here. I do have a question if nobody else does.
You could ask it for now, I guess.
Um, so I thought I saw somewhere in Discord today that you had said something about, initiating, a call credit spread at some point. Was that just a zero DTE thing, or was that, more of a swing trade because we're getting so frothy
Um,
and
I don't think
extended?
that was me. No,
No?
might
Okay.
have been someone else. I'm not sure.
Okay.
Yeah,
Just with the VIX so low.
it's so low. Um, I'm leaving idle cash, and I mean that's another thing to consider. And Tasty Trade talks about it a lot. When the VIX is this low, you probably should be using even less than 50% of your buying power.
Hmm.
I think they go real extreme, like 30, 25%. And then just be okay with slightly smaller returns when the VIX is this low. And just that's just part of life. When the VIX is increased, then obviously if you have excess buying power, you could definitely take advantage at that point. But it could be a while when that happens. So it's a
Well,
tricky situation right now.
what are some of the trades that you've been looking at, kind of quasi hedge trades that are safeguard-ish, maybe with a wider debit spread,
Okay.
or what are
Yeah,
some of the things that you're thinking about or that you're actually doing
right.
where
So
we're
so
we're,
just
we're in
be
an extended market condition like
right.
this?
So I'm already with a pretty high allocation, or it's going to be a pretty high allocation by around February in the safeguards. There's so many of these little hedges already as it is. And then I'm going to still most likely lean towards around a 60 to 90 day put debit spread on ES. That will cost around 1.5% of my net lick, give or take. And that's going to be pretty far away. It's going to be far out of the money, low deltas, but it's a hedge. And I'll look around 300, 400 with. So I
Okay,
don't think
pretty
it's
wide.
the, yeah, it's going to be a wide width and it's going to be a low delta. So the bot put might be 0.07, zero point 0.1 delta. And then we're looking 500 lower than that. It might make a little more sense to do that over just buying the 14-day ES puts that I was doing before. That's really good for a really quick black swan head, like black swan
Yeah.
event. However, it's almost never going to pay out. If you go with the debit spreads like that in a longer DTE, one, it's a little bit less time like worrying about it. because I just left. I still have one on that I did 2 months ago almost, and I'm just gonna let it expire worthless. But a little less to worry about. You do get a debit spread over a just bought put, so there's not as much of a hedge. But if you're already so low on the bought put anyway, and then you're going 3 to 500 with even lower on the sold, you're still pretty hedged out because that's going to need 0.03, 0.02 delta on the bought, so or the sold put. Now, in terms of the safeguard trades, a lot of different ways you can look at it is you could change the width of your put debit spreads. Obviously, the max profit will be whatever your debit spread width is times multiple. So if it's ES, it's times 50. If you have a 50 with ES, put debit spread is 50 times 50. That's a $2,500 payout there. If you go to say 100 with, then you're at $5,000 payout, right? Because it's 100 times 50. So increasing the widths could work. The problem with those are you're not going to make as much initial premium because you're paying more of a debit. You would have to either go higher delta on the naked puts or just be okay with a smaller just initial premium that you'd get. Another way you could go about it is to lower the amount of buying power by buying 2 puts below the 2 nakeds. So you're making it a put credit spread on the bottom instead of 2 naked puts. I'm going to be doing one of those on ES every 4 months. I looked at it. So pretty much for an MES naked, sorry, an MES strangles about $1,100. If I did 100 with ES, put debit spread, no, I'm sorry, put credit spread with the normal 50 with, it's going to be very close to the $1,100 anyway. Your initial premium will be a little less, but you have that $2,500 possible payout on the put debit. So about every 100 with or so you go on your put credit spread part, it's about $1,000 more buying power, at least on Tasty Trade.
Yeah, the thing I want to play around with is looking more at extrinsic on the bought put and a put debit spread,
Okay.
with the idea of trying to sell on the sell side of that put debit spread. In that case, the lower strike, that the amount that you collect is enough to cancel out the extrinsic
Yeah.
on what you're buying.
Yeah. That's a good
So,
way. I'll have to research
so
more on
time
that.
value, so time value doesn't become an issue.
Right. Have you explored different DTEs as well? Like you go 100 days out on the nakeds and then 90 days on the put debit,
Oh, a calendar.
pretty much. Because the average amount of time for the nakeds to close out on 120 days is about 93 days or so. So if you put on a put debit spread at 90, it's going to pretty much close around the same time anyway. So you're not waiting the extra month. The put debit will be a little bit cheaper because it's a little less DTE. It's another one to consider. It's just going to be a little bit more managing then because you have calendars with 2 different expirations for each thing that you do. A little more advanced. I didn't really see much of a benefit to it, to be honest. But you're talking just on an MES, you're talking maybe $10 or $15 cheaper. If it's ES, maybe $100 cheaper. That's not a ton of money in the end. So I might as well just keep the debit full 120 days or so.
Fair enough.
But stuff to look at, yeah. For the extrinsic is interesting. I remember a few years ago I would do things where I'd buy a really high delta leap call, year out in SPY or whatever. And then I would sell really far out of the money, like monthly calls against it to just pay the extrinsic value essentially. So if you go really high delta on the leap, you don't have much cost in your extrinsic in the end because it's mimicking 100 shares very closely if you buy like a 0.9 delta. So it doesn't cost much in sold calls to actually pay that off. That's another thing to consider. And I'll look more and brainstorm more on that on the safeguard how to actually pull that off.
Yeah,
And
that actually looks kind of interesting when you look at like NQ has got a higher implied volatility.
mhm,
So, the earlier call that you sell out of the money probably pays a little bit better in order to
Right,
try to move your basis down faster.
right. Another way that I'm already pretty much doing it is with the first strategy one. I'm selling the monthly naked puts anyway, and
Hmm.
it's taking in some, so that pretty much pays the extrinsic anyway on it. Um, just simple math with ES. Again, your put debit spread is typically around 8 premium. So you're paying 8 times 50, it's $400. If you sold one monthly ES at like 5, you're making 250 right there. So if you sold 2 of those, you already paid for that put debit spread already.
True.
The thing is you actually have more risk because you're selling more puts against it. So that's something else to consider.
Yeah.
And the deltas are still pretty close anyway to your naked puts. So it's almost a wash. It's not really a big factor in the end. I mean, you could even look into really low deltas. Obviously, if the VIX is high teens, it'll be better. But if the VIX is like 18 and you're selling like a 0.03 delta monthly against it to pay for extrinsic, that could make some sense. But then you are using some of your buying power to do that. So you got to just weigh the benefits on it if it's worth it or not. It might be. I'll look more into it.
Yeah, I'm just thinking about using it more tactically.
Yeah. Definitely makes sense. There's a lot of interesting things you could do to really fine tune, tweak these things. Um, Next year, I'm going to go much more mechanical. Just get my entries in, wait until the profit hits, and then take it. And the last few months, I was taking out much quicker than that because the market just been up, up, up every day, pretty much. So, take out that 60, 70% profit in a month. You might as well do it instead of waiting for 90% profit. But it's not really needed in the end. Like obviously my account did very well because of that and the market kept going up. So I never got in trouble on my safeguards that I did a little bit shorter term. But if the market turned, like obviously it could hurt a bit. It just didn't happen.
Yeah.
I guess there's a fine balance between just how much are you willing to trade and watch all these things versus like having a life, like having your job, not even your job, like enjoying your kids, enjoying your family, things like that, where I think I need to have a little bit better balance and just being able to do all that other stuff too, instead of thinking I need to trade like all the time because you don't really need to, I don't think. Like you can do perfectly fine as a super mechanical, 120 days out every 2 weeks, take the profits at 90% on the nakeds. It's slow, it's boring, but it works pretty much every time, right?
What's your verdict thus far on the broken wing butterfly that you're doing?
I'm going 10 width on the bought, and then 20 width on the sold. I was looking into different widths, and that's for a 5 DTE, that's pretty much ideal. It's not worth it going much further out because then you're using a lot more buying power. If you go, on the credit side, like 30, 40 width. Jamie, Russell, any questions? Me and Brad are going a little deep diving. You might have been a little confused about what I was
I mean,
talking about there.
I had a sample safeguard trade I put in Thinkorswim about 10 days ago, and I wanted to look at it and see what it was doing. And
Mhm.
Thinkorswim is doing some kind of reprogramming update
Course.
thing. So it's like taking a half hour to get the terminal to load. So
You gotta
hopefully
love
it's
these
gonna
mergers
hopefully
with
it's gonna load
Schwab, right?
back up and it didn't break.
You love the mergers with Schwab. It's going to be probably in the evenings because less people are on the markets. And it's like when you drive on the highway and they're doing construction, they always do it at
Yeah.
night where there's not as many cars. But obviously, there's some cars and they have to deal with the annoyingness. It's like it's the same thing. They're not going to be doing all these updates in power hour because people
Yeah.
get really mad. So just be patient there. But pretty much every safeguard is going to do really well right now because the market's up so much. Your naked puts are going to decay very quickly and very big compared to your debit spread part. So it's not the
Yeah.
best
I
like
I,
ideal
I looked
profit,
at like
but
last week or something and it was really up a lot and I couldn't believe it was right. But
yeah. Um, I mean, the perfect situation is your put debit spread gets max profit and your naked puts get max or 90% or so profit. However, the way that these are structured, you're perfectly fine if the put debit spread's worthless, especially if you could close those nakeds really quickly. You know, if you're getting 90% profit on a naked put in 60 days or so, you're making 10% on your buying power plus cash in 2 months. That's a really good return, especially if you do that over and over again. So I have a bunch of put debit spreads just lingering around at 4,000 to 4,200. And I'm pretty much counting all these as a max loss at this point. It's not worth closing them for 1 or 0.5. The commissions alone are pretty much the same thing. So they're just
Hmm.
sitting there. And I'm perfectly fine with it because returns are really good on the nakeds. So just got to wait it out. I
So
think the market. I think the market will eventually turn, and I don't know how bearish it will get. I mean, it might go down 5 to 10% in the next few months, and then you'll have to wait a little longer on your naked puts to get your target profit. But again, the average is 93 days. Sometimes it might be near 100. Sometimes it might be 60.
So Lance, when you're closing out your naked puts earlier than, call it, 30 days to expiration. So
Yeah.
in my opinion, if it's less than 30 to expiration,
Well,
that's a win, right?
oh, yeah.
You closed it out ahead of schedule, so to speak.
Yeah.
What's your plan? Do you just stick with the cadence, or do you go ahead and say, okay, I've already closed one out,
I
it's
don't
early,
know.
are we going to put another one back on now?
Yeah.
You
So
just
that's what I was doing the last few months. I was adding on new ones and I was going even shorter DTE because I wanted to have my buying power available for January because I wanted to pretty much refresh the ES. So I was doing some 60 to 90 or so day safeguards and they were working out too. But again, that's a bit of management. You got to be watching the market and you have more positions in play. So I think just mechanically just staying with a very consistent, I'm going to do X amount of contracts on MES or ES every, say, 2 weeks. Whenever it closes out, it closes out. If it happens to close out a little early, or you get a little bit more buying power for maybe a couple of weeks or so, it's not going to be dramatically different in most cases. So if you want to push it, you could re-enter right away. If you don't want to push it and wait a few weeks, I don't think it's really the end of the world. You still have your put debit spreads on anyway. You have extra buying power for a little bit. I mean, all those things are good anyway, right?
Yeah. And I mean, theoretically, you could stay within the same DTE and
Yeah.
just sell, two more additional puts against the debit spread
Yeah.
that you already have in
Yeah,
place.
exactly. You could roll. I did some rolling up of the nakeds, essentially close out the nakeds, resold new ones, a little higher strike, took in a little more premium. I did the same DTE as the put debit spread, just to keep the DTE similar. And those work too. I mean, the market was so high up. I was rolling some 500 points up and it still worked on the roll. The roll closed at 70, 80% or so in like a month or two. It was crazy. But
Yeah.
in the end, we're talking maybe $1,000. I don't know how much it was. Like compared to not doing it. It's not dramatic. Hard to say
Yeah.
anything.
The thing I like about just staying with the cadence is, like, you don't know what market is going to
Right.
be 90 days down the road, right?
Exactly.
So if you're over investing in one particular time period, you could be over investing at the top.
Yep. That's why I'm very hesitant to be adding a lot right now with the VIX really like yearly lows here. So if you add a bunch right now and then the market drops and VIX goes up, it's going to hurt. So
Yeah.
these cases are harder than when the market drops 5-10% in a few months, I think, because it's very tempting. It's like the devil's like right behind your back, like you want to do more of these because it's working so well, and then the devil gets you afterwards. So
Yeah.
it's
No,
tough.
I'm with you. I'm like, I posted that note regarding VIX level yesterday or the day before, and I was like, my goodness, these puts are getting
Yep.
so cheap.
And look at the RSI and the daily on the SES. It's staying oversold for almost a month. It's just not letting go on the RSI. You'd
Yeah.
think eventually it's going to push down. It hasn't yet.
Yeah. I mean, look, we're due for at least a pullback.
Yeah. Um, it's interesting in terms of like trying to get monthly returns. Like my target goal is 2.5% a month. Some months I could get 4 or 5%. Some months maybe I get 1%. If it averages out, I don't really mind when that happens. Like I'm already looking into January. It's gonna be pretty low because I'm not adding on all these safeguards that I could have a month ago or even now that might close out in January. But I'm okay with it. There's more to life than trading in the end. So I'm just essentially a slight reset. If the market happens to tank quite a bit the next month, I'm in really good shape. So January could end up being a good month, but probably won't.
Lance,
So,
you got to form a hedge fund.
yeah,
30% a year would put you in top quartile.
yeah. I don't know if this is sustainable every year. Let's see. I, I've been thinking a bit about notional values because if you just look at the notional value on an ES contract, it's a ton. I forgot the exact amount. Do you remember? What's the notional on ES right now? Like one contract?
It's probably
It's
around 250,000.
yeah. So
Yeah,
imagine if you had a lot of those on and the market drops. I mean, your notional is just nuts. And then if you don't have a very specific plan to stop out or you know do other strategies, you're gonna get screwed. So that's just more of the half class empty because yeah, you make good returns, but it's not always going to be that way. So you just got to be aware for it when it drops. This is like more psychological than like trading, but it's good. It's good to talk about these things because you never know what's going to happen, right?
Yeah.
I would think the market is due for a drop. I mean, you could see almost all the indicators show we're pretty much overbought and it's most likely going to drop. But will it? Maybe not. I mean, maybe we just consolidate around here for 3 to 6 months for all we know. There's a chance that happens.
I'm actually thinking about buying some $10 VIX calls.
Yeah. I bought a VIX call like 2 weeks ago when it was around 13 and change. I bought like a 15 call, 90 days out. It's down quite a bit, obviously. But
yeah, I was
you
one
know,
at like
you
12 or 13 or something.
yeah. It's near like 5 year lows or so right now. The VIX is
2020 was the last time the VIX was this low.
yeah.
Yeah,
And then when COVID hit, it was what, like 80 or something at one point? It was
Yeah.
just few
Well,
days.
in what? That was February,
Right.
late February when that happened.
I mean,
Yeah.
about a few months on that contract. I mean, what are the chances it's not going to pop at least in the first couple months of the year? I mean, I hope. I don't want to blow up $500 on that, but we'll
Yeah.
see.
I'm not in a specific like buy VIX to hope it profits. I'm more of like it's kind of a mini hedge in case the market drops. That at least works out. And if the VIX calls don't work out, I'm most likely making a lot of money in other stuff, which is a bigger part of the account anyway. That's how I think of it. I mean, some people could just play VIXs. One of my friends in high school, he's a day trader, and he said the only thing he can't figure out is the VIX. Like everything else he does seems like it works really well, but the VIX is completely a coin flip. Like you never know when it goes up. And he's been trading for 20 something years. So yeah, we got about 3 more minutes. Any other quick questions? Russell, you got anything to add or ask? I don't know if you could hear me.
No, I'm good. Just listening. Interesting as usual. Thanks.
Did it make sense what me and Brad were talking about a bit like 10 minutes ago?
Yes, it did indeed.
Good.
I was actually closing out a couple of positions that were doing really well.
Yeah.
So yeah, a safeguard, closing out some naked puts, and yeah, things are looking good though.
Right. But again, it's what are your thoughts on like should you re-enter right away or should you wait?
So you're asking me?
Yeah. So like a lot of these safeguards worked out really well. Do you think you
Yeah.
should re-enter right away with the funds you have or wait it out? I mean,
So
there's no
yeah,
answer to this.
yeah, yeah. So it's interesting. It is definitely an interesting field to the market, like you guys were saying about the VIX and stuff, and it is a dilemma for me because I am adding funds constantly. to the account. So I like to be aggressive and use most of the funds, but then you've got the low VIX, and then you've got like me adding more funds. So it's just I'm kind of all up in a sort of turmoil at the moment in terms of getting a system like really set. But I think by January, I think my goal will be able to have the account funded as much as I want to put in it for the time being, and then I think it'll be about 50% buying power. So
Yeah. I think you actually did really well the last month because you could have easily entered a lot of these positions, but you decided not to. So I think just me, in my opinion, I thought that was a good job.
Yeah, I'm doing better. I agree. I definitely am. Like I just looked and I'm at 50% at the moment. For the first few months of doing this, for you guys that maybe weren't watching the Discord or whatever, I was a bit of a lunatic. I was doing like 90% buying power and juggling things like a lunatic. It worked. I mean, I made some big returns, but I was lucky. You know, it's not like a long-term strategy. So I'm trying to get more disciplined with it and follow Lance's lead a bit more on it as well.
All right. Well, those are all types of questions you can ask me in the Discord at any time. I guess we're going to end it here. So it was a great talk, guys. A little bit more advanced, more psychological there. Appreciate all of your support and questions. And we're going to see you guys in the Discord. Have a good rest of the evening.
Thanks very much.
All right. Thanks again,
holiday, guys. Take care.
Good holiday, guys. Have a good one.
Thank you.
No problem.